All right, we're going to do the market update on M2SL as well as the Federal Reserve's balance sheet for May 2022. Actually going to start with a quote. Peter Schiff, he's a big gold guy. He said, "The fact of the matter is you got to look at what the Fed is doing, not what the Fed is saying. They have to talk tough. It's the opposite of the Teddy Roosevelt strategy. They don't have a stick. They can't really fight inflation." That's kind of interesting. That's terrifying, but it's maybe true. However, we are going to watch what the Fed's doing, and they are starting to follow through on their attempt to fight inflation. So I think what he's referencing is we can't do a Paul Volcker 20% interest rate to just really attack this thing. The actual fundamentals of the economy are not strong. And therefore, that is the big risk to doing something big that would fight inflation. But they are acting like they're doing it, or they're starting to. So it's worth paying attention to. M2SL, this is the amount of money in our circulation. Just think of it that way. It's easiest. $21,728,000,000,000 in circulation, which is actually down for the first time here. We're down 37 basis points on M2SL. And a lot of that obviously comes from balance sheet. So that's a big move. That's a big deal. And I think that's why we're starting to see some of these asset classes flip around a little bit. So a month ago, it was 21,809,200,000,000. That's where that drop came from. However, year to date, we're still up, right? We still haven't destroyed the money that was printed just this year, right? So we're not doing the American Recovery Plan, the ARPA Act, and we're not doing the PPP and the unemployment assistance, all of that crazy printing that came all the way from January of 2020. But we're slowly decreasing the money supply, and I would say by definition that is deflationary, which is a good thing right now. It's a good thing most of the time, honestly. I don't understand why people don't think prices should drop. As technology gets better, prices should drop. As production ramps up and we figure out how to make more stuff more efficiently, prices should drop. However, the Fed just wants to take 2% out of the economy per year. That's their goal. So still a year ago, 8% growth on our inflation number. But this is a tipping point. Actually, on the chart, I might throw that chart up here on this video, but that chart, it does show a tipping point, and that's good. We'll see how sharp that sell-off becomes, or destruction of money comes. But that's going to obviously have major ripple effects across the economy and across financial markets as well. So the balance sheet is made up of treasuries, mortgages primarily. It's also got some high yields in there. And if you recall, in 2018, they actually did start to quantitatively tighten, meaning to sell some of the stuff off the balance sheet. And it went catastrophically terrible. and they had to bail on it, and just in time for COVID. So that was cool. We all forgot about we actually tried to raise rates and tried to start selling this stuff, and it just imploded, and then COVID came around. We got something to point at. However, last month, in the month of April, we saw a reduction in the balance sheet, and so this is part of the plan. Is they're going to sell those treasuries, mortgages back out into the market, which obviously affects the market pricing. But effectively, what they do is they get those dollars back, and then they're uncreated, and that'll show up in M2 money supply. So we're starting to see the destruction of money. Fiat money, which doesn't have any asset backing, and that's a good thing. So we're down 27 basis points on the month for the balance sheet, 37 for the M2 money supply, but you can still see we're 1.78% up year to date on the creation or the increase of assets of them purchasing off of the market, and now they're turning that around. So up 12% on the year, 113%, more than doubled the amount of holdings on their balance sheet pre-COVID. They still had $4 trillion left over from the bailouts and buying up all the garbage debt out there and all the bad mortgages that were done from 2008. So from 2008, we were trying to get rid of that 4, and then COVID came and we just doubled it. So great job, everybody. So we track these things just to take a look at what's coming, right? We've seen inflation for quite a while. coming and how it would actually move through to the pricing, to price inflation, which is different than monetary inflation. Monetary inflation leads to price inflation to some extent, and it's pretty much one-to-one. So here we go. This is the first month of actually seeing some destruction of dollars, and we'll see if they can continue that. That's the concern, is that, well, they started this, but how quickly will they bail and have to start the money printing machine again and buy up a bunch of garbage assets as things implode? So stay tuned and hang on tight.